If you wanted to use volume and volume impetus and volume divergences as a justification for your indicator confirmation, that's fine. Nothing wrong with that. I would say that the trend here has rolled over. The bull has fallen asleep. The bear is wide awake. So my feeling here is that the bear is now driving this bus. If energy prices are falling, that should be deflationary. So, does it really make sense that gold prices are as high as they are? I don't think so. I've talked to you before, and I said this in the public broadcast, that I actually think that this is nothing more than just a dead cat bounce, what's going on in the gold market. I think it was a pretty well-defined bearish AB equals CD that was hit, and this is just like literally boing straight up. And we should probably expect this gap and this gap here to be filled in. That wouldn't surprise me one bit. I guess the question ultimately is, are you trying to not catch a falling knife, but are you trying to pick tops here in the market, which can sometimes be a bit dangerous, but it's interesting how we had a 9 on the Tom DeMark there. We are coming into horizontal support and resistance. There's probably liquidity pools all sitting up here, stop loss orders, all that. If you really want to short this in earnest, do we want to maybe wait for some sort of div or something to come in here? It's interesting how the 200 period moving average is playing in there. Divs, I would probably be hunting off the 4-hour chart. And what does that look like? Huge bearish momentum divergence in MACD. Willie, of course, stupidly overbought. And you can see the buyers are backing away. And I think we even made reference yesterday. I said that if you got an up bar that does less than, I guess, this low right here, this is actually a really good example of volume impetus. So any level oneers that are watching this video here today and are like, I'd love to get more sort of examples of that volume impetus study. You always want to try and find a market that's gone like ridiculously far. That's usually a great place to start looking for signs that the bulls have lost interest. It's just, think of it in very real terms. If somebody thought gold was cheap down here and they're buying tons of it, and keep buying, because it's nice cheap price. But then we get up over here, these guys that were buying down here are kind of looking at price going, I don't really want to pay that much for this thing. Maybe just be patient and let this thing settle back down and we can go back in and buy at a cheap price again. Relatively speaking, what's cheap, what's expensive. So that's sort of what this volume impetus kind of concept is. And what you need to see is, one high, don't step in front of this. And sure enough, look what happened there. Had a rising volume bar, but we couldn't break through this high. But you could have said, okay, well, give me second high, then give me a third lower high so that we can start making a trend of lower volume. And boom, this volume bar broke that volume bar. Okay, maybe this is the second high. Look for the third high. Boom. Oh, this bar broke that high. Okay, maybe this is the second high. All right, we'll look for a third high and then boom. Oh, we broke that high. So hopefully you can see how this works. As long as we keep breaking these highs, then there is no top. Notice this high, though, did not break this high. Oh, hello. So now we have one high, two highs, three highs, and the key is, do we see a volume bar less than whatever this M is, which actually confirms a new trend lower. So that's whatever this low is, right? And this lowest low looks like it's that one right there. So that is that number right there, which is 10,554 contracts. That's a hell of a lot of contracts, man. So that if we do less than 10,000 of these micro contracts, then that means that the bulls are falling asleep. And hello, what number is this? Well, I guess we gotta open that back up. 9,664. And then the next one, even lower, 9,250. So I do believe the bull has fallen asleep. And then using the same logic like we did with where is the top? Boom, we had a big volume spike on the downside. Notice these down volume bars are getting bigger and bigger. So we want to wait for some sort of sign that the bears have exhausted themselves like this. All right, maybe this is the start, but boom. Oh, no, they just busted that. So this has got to be the next point. But until we get three lower highs on the red bars, the bear is driving the bus. And oh, look at what's happening here. We're actually getting interesting war that's going on right at this particular level. If the interesting, look how as we swing from positive to negative on just this one little doji bar here, you can see how the indicator is flipping from a new M to potentially a W. So that's an interesting anecdote, but I would say that the trend here has rolled over. The bull has fallen asleep. The bear is wide awake. So my feeling here is that the bear is now driving this bus. If you wanted to use volume and volume impetus and volume divergences as a justification for your indicator confirmation, that's fine. Nothing wrong with that. You know, might even consider this kind of looks like maybe like a 113 failure. So if we went there, back up to there, and we went extensions, there is your 113. And actually, this is a pretty typical harmonic level for markets to reverse off of that 113. I'd also might ask, you know, are there any bombs going to the upside, especially like off of this consolidation range to try and sort of validate reversal levels? So there's 877 way up there. So I don't know whether that's relevant. Interesting how 4669 stopped the bull there. So maybe there's still another push up top here. Could be. If we're going to use other momentum indicators like price momentum, whoops. Then I think, if I'm not mistaken, yeah, MACD is already broken. So you could get a momentum failure sort of indicator confirmation out of MACD here. And then I think when we showed you this earlier, RSI is already massively in divergence and way overbought, actually coming out of overbought. Interesting too. Look at this squeeze. You know, good old Stewart, he would love this as a trade setup where basically energy is compressing in this indicator. Here's another. So, gee whiz, here are two beautiful tutorials for you guys today, and girls, and houseplants, and all that. Hopefully you can see the compression in the Bollinger Bands, like here, just insanely wide. Way too wide. You can't do anything with that. Bollinger Bands compress, and really, whichever way this resolves, this is the building of energy. And, you know, you can see the M's. In fact, if we were using Brian's RSI methodology, I think we'd say that this was the first M. So that stops the bull. Boosh right there. And now, if you get another M come in here, then that will start the actual, that would be a sell signal outright. It's not through the 50 line, so it's not going to be like a run for the hills sell signal, but it is a sell nonetheless. And I think if we look at the price chart, I think that makes sense, because you can see if this sell signal comes in here, then what happens is probably this M top confirms. And then this M top, you can see like 30 SMA is support there. That's probably going to align with this low. So this sell signal is probably going to be this fractal that fires, and it's going to take us down into this 30 SMA. Do we blast through these lows, or does the market hold that low? My hunch is that if that fractal fires and the RSI signal fires and we lose the 13 EMA, then it's probably something like, here's a good example. So probably something like this. You know, while the moving averages are bullish, we fail. Now this happened in just one candle, right? But you notice fail, bang, right into 13 or 30 SMA, and then rally back up into that range again. And then do we actually have the moving averages cross themselves and price spits up a sell signal? And if this happens, my hunch is this is the RSI move through the 50, which gives you that sell signal. It'd be interesting just to see what RSI looked like through here. Yeah, so you can see there's the top and 51. So there, yeah, perfect. So you can see this is the move it through the 50 line. So that is your big fat sell signal. And notice that's on the moving average cross, and that is your big honking trade. So I think this is sort of like the initial sells, and you go, well, Brian, it looks like we got bear divergence in MACD. It's a, 1M, well, 2Ms, but we're not going through the 50 line. So what ends up happening is we probably sell off into that moving average and then coil up a little bit more. And if this really is a bear, then we go through the 50 line on some really good looking structure, and that sets up the big trade. I would say, if you are hunting for a top here in the gold, which I don't think is a bad idea, I think we're just a bit early. That's probably the way that I would look at this. And then also, too, this makes perfect sense as well, because what probably has to happen here is we're probably going to pull back, into that 30 SMA, then rally back up. Then we hum and haw about the inflation numbers on Friday. And then, heading out of the eclipse, maybe we get maybe this is some sort of narrow sideways channel. And then heading into November, into Fed meetings and all that kind of stuff. And the Fed says, well, we're still going to keep our foot on the gas pedal. We're not going to let inflation come back. We're still going to keep rates high. And then you actually see your serious correction in gold in earnest. So, hey, I'll leave that on the chart. Let's see if it progresses along those lines. But that's what I'd be thinking in the gold market right now.